Chat up here. Mhm. Where are you? All right. Hello, Robert, Gigi, Daryl, Shannon. Do we have a? Trying to see if he's in here. Do we have Jeff in here? Let me see. I don't want to. I don't want to call him out for privacy if not. Um, welcome, welcome. Another day, another dollar. All right. Let me see if I have it up here. I thought I had the chat up. Where'd it go? Texas. All right. Are y'all ready to get rolling? I got a nice little training today too. I wrote a slide deck in about 10 slides in about 10 seconds, thanks to AI. We'll go over trading against the herd. Another one of my own creations, not a 500-page slide deck. All right, so big shout out to two guys. One of my buddies, Jeff, made over 50K in Netflix, closed Netflix calls yesterday, bought March 6 calls, and Netflix is up 12% today. He's up over 200 grand this week trading. So big shout out. And you don't get many days where you make 1200%. Um, he just kept loading up on calls. If you recall, if you're in the option pit, I said Netflix is going to go up from here because of the deal with Paramount. Netflix can't have two wrestling shows on the network. So we called it out literally around 75 bucks and now it's 95 bucks. So huge shout out. Uh I mean it's incredible and really really motivated to start trading some size again now because now I got FOMO. Now I got FOMO on the I want to trade big again because it was just unreal. I mean, what a move. What a move. Just absolutely phenomenal. Um, he took 50K in profits and bought around 8K in calls. So if you do 1200%, 8,000, what is that? Like 100K? 100K-ish? Incredible. Warner Brothers is dead. I mean, it's dead. Netflix is the move. Paramount too. Paramount, look at the move in Paramount. Because it's like if you're in the option pit, we said, we called this out. Look, we called Netflix flow out yesterday, all week, and here. Paramount will buy Warner Brothers, in my opinion. Ellison, the CEO of Paramount, wants it bad, and you can't have two wrestling shows on Netflix. TKO, WWE, and AEW. That was a couple weeks ago, or about a week ago or so. Netflix should move higher from here right after. And then what did we see? Those Netflix calls hit the tape. Those Netflix uh weekly 85s. They're now over $10. And then yesterday, persistent call buying and Netflix. Oh, look, more Netflix calls today. I mean, it's been the gift that keeps giving. It's a huge, huge shout out there. I mean, I know I'm a nerd when it comes to wrestling, but you just I mean, I just knew it can't happen. You can't have WWE and AEW on the same network. They're two rival companies. It would never um it can never happen. So that was the giveaway. And then obviously Netflix went to the White House yesterday, and then after hours, the stock was up like 10%. I mean, the stock's going 120 bucks. Stock was down, what, 50%, 40% in a short amount of time, so it's got to bounce back. All right, I'm gonna do a little training with y'all that I wrote. No sales, no slide deck, or no pitching or anything like that, thankfully. Uh, even though they want me to. So, if you're new or if you've been taught to trade the markets the wrong way, I got something for you. If you're trading the markets the right way, you're probably already in the option pit and stuff. But if you are not making good money, I hope this will help you uh, be a wolf and not a bah! Not a sheep. So I hope this will help you out if you're new. Um, oh, and then I'll show you some Amazon stuff I picked up. I've been having calls with developers all days, and we only have 200 people. Oh no, should I save this
No, it's
for
a little
another
bit more than
day?
that. You should. We're closer to 300.
Oh, is it just wrong?
Yeah.
All right, all right, never mind. I don't work for free. I won't do stuff unless people are here. I'm you know, I don't do the itty bitty stuff. All right. If you want the option pit, I don't know. I don't know what to tell you. You probably have to call in because they don't have me pitching it today. The marketers, they whatever. I don't know if the marketers even attend my stuff. That's how bad they've been lately. But let me not get in trouble because Publisher Nate is already losing too much money. All right, the herd mentality. If you watch CNBC, you're probably in this herd. Or if you were like, if you had the question, why didn't Nvidia go down on earnings? Fundamentals were good. 75% revenue. Ha 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 ha. None of that matters. And I'm going to tell you, Santa Claus is not real because he's not. Everyone else will, but I respect you too much and you're an adult to be lying. So, there's a couple of things that retail investors are always going to lose. And that's why they say 90% of people lose money in the markets. Oh, sorry, I got YouTube up there. So the first thing, if you are retail, which we all are, I mean, a couple of you, one guy told me he got flagged as an institution because he was trading so much size. Uh,
Lance, is there a way to make your screen full screen there?
I don't know. Is it not full screen?
Yeah, it looks a little small.
Really? I don't know. I don't know how to do these. If it's not like a Google slide deck, I can't tell. Let me look.
Hold control and then the plus sign.
Control plus. Maybe that's better. Is that
Yeah,
better?
it's a little bit better.
All right. So we all are YouTube, or we all are retail. Well, a couple of y'all got flagged uh, as institutions. So if you're retail, especially if you got in the market in 2021, the whole GameStop thing, you were heard to follow the crowd. So buy crypto, buy meme stocks, buy AI stocks. And what happened to all those people? They got their ass kissed, crushed, to say the least. They got crushed. Most retail traders are conditioned to follow the crowd, enter trades when the trend is already exhausted and the smart money is exiting. So, for example, who told you to buy NVIDIA the day of earnings? Probably every media outlet said, look, NVIDIA, look at the quarter, look how good. Meanwhile, what were smart people doing? Selling or selling ball. Hence our trade yesterday. 60, 70% just by selling some credit spreads intraday. Social media has now clogged the stock market. Anytime you see a stock getting pumped on Twitter, Reddit, CNBC, the top is in. You have already been late. There's newsletters, there's penny stock promoters, there are analysts, there are short sellers, there's data feeds, there's news feeds, there's squawk boxes, there's Benzingas, there's the CNBC, Josh Brown, the Ponytail Bros, the Tom Lees. They're pumping a stock to you. Kramer even admitted this if you watch his old YouTube videos. He used to pump stocks to get out. They are pumping names to you. You might be saying, Lance, how is that legal? How is a bunch of stuff legal? Right? It happens. Can't fight the machine. So if a stock has gone viral or is on Twitter or X or getting talked about, the top is it. Buy puts, run. You're going to lose money. That's reactive, not proactive. The herd buys at the absolute top because they have FOMO, right? Who here bought Bitcoin at 120K? Probably because Grant Cardone, Michael Saylor, CNBC told you to. Then they sell at the bottom because the market will always go where there's max pain. So if a stock goes up and starts going down, people don't sell here. People don't sell here. People don't sell here. Where do they sell? Down here because there's max pain. They can't take it anymore. They cry. The contrarian, you have to stop following FOMO, social media, and you have to untrain your brain from a retail trader. So if you got into markets, you probably watched CNBC, you probably read a book, you probably attended some wannabe financial advisor talking to you about the stock market or follow some like 200-day moving average. That's wrong, wrong, wrong. Santa ain't real. Neither is the Easter Bunny. You have to be a contrarian and think independently and realize when the herd is doing something, if the herd's all coming in, no, it's going to go down. Or if the stock is getting crushed and the herd is all crying, like Netflix, when's the best time to buy? Down here, because they're all in max pain. Understanding the emotions of the market cycle, very, very important. The bullish headline trap. How many, if you're in the option pit, how many analysts pumped NVIDIA yesterday? We probably had 5 Wall Street analysts raise their price target in NVIDIA to 300 bucks yesterday. Anytime you hear Wall Street analysts say the stock is a buy, that means the institutional side, the trade desk, is selling, creating liquidity. So every time an analyst upgrades a stock, it's going to go lower. Again, they're trading the trap, the pump. Anytime a Wall Street analyst downgrades a stock, it's going to have a relief rally and go up. So bullish headlines and media hype create buying pressure from retail, allowing institutions the liquidity to get out. Because if they were to get out at the low, they would crash the price. So they have to use pumps as a way to get out, to create liquidity. Very important you understand that. Again, no one else is going to tell you this, but I will. The analyst deception. Wall Street analysts do have no money in the game. They are a PhD or some MBA from a good college where mommy and daddy or some elite who got them in to get a 250,000, probably now $300,000 job on Wall Street. AKA, they are broke. You try living in New York on 300,000 a year. After my boy Mandami takes away your taxes, you pay rent, you're left with maybe $1,000 a month to go buy your $12 coffee. The analysts know nothing. Anytime you see overwhelming bullishness in the media, so like Bitcoin a couple days ago when it rallied and everyone was pumping it, it's a good time to exit or create a short. Buy puts, sell bear call spreads. Do the opposite. For example, 500K an hour? Oh, Lord. For example, Tom Lee this week. Remember the big Bitcoin rally? What happened? Look at my boy Amazon Go, by the way. What happened this week in the crypto markets? We had a huge rally. Remember that? A huge rally. And then what has happened in crypto the past 2 days? They're down 6%. Look, I mean, look, I can show you articles of the pumpers right here. Tom Lee, meaningful low in crypto and equities. What has happened the past 2 days? Why strategist Tom Lee believes the AI and crypto sell-offs are almost over. What happened in Nvidia yesterday? Crushed. What happened to crypto yesterday and today? Crushed. He said the markets got it wrong. Well, yeah, and I was supposed to be 7 foot tall and play basketball. It ain't true. The trap is set. Retail traders were rushing into the bottom, providing necessary liquidity for institutional players to distribute their positions to get out. You probably heard of the Jane Street Capital 10 a.m. sell-off. They said the crypto rally that day was because they got investigated. You think one bank, one firm is creating all the liquidity in crypto? No, absolutely not. Within 48 hours, the market reversed sharply, flushing out the late longs and hitting stop losses all the way down, in my opinion, 60K. Then you have margin calls get hit. The max pain theory. The market is mathematically designed to move towards price that inflicts the maximum pain for the largest number of participants, the maximum financial loss on the largest number of participants. And if you believe in, let's say, stop losses, the market will always go to the stop loss, tag it, and then go up because there's all that liquidity at the stop loss. Liquidation honey. Market makers and institutions profit from forced liquidity of retail traders. If the herd is long, the market must drop to clear the books. It needs to flush. We call it a liquidation break or a flush, where you take all those orders, boom, on the bid, they get tagged. Algos do that a lot, especially if you trade futures. If you trade futures, you probably experience this. The zero-sum reality. Trading is not a collaborated effort. Well, that's AI saying that. I mean, I think it is. For a professional to win, the sheep must lose. So you have to beat the sheep or kill them. It's a brutal game, daddy. The market always seeks the path of most resistance from the herd. So again, it's not fair. It's not easy. You have to be the wolf, not the sheep. Never follow the herd. You will get killed. If you're young and you're only seeing bull markets, this should be a wake-up call. If you're used to just buying Apple and Palantir and Robinhood and watching them go up, reality's probably set in this past month or so. The sheep follow TV analysts or experts. What do I do with bonds? TLT. Is it trending? What do I do with Palantir? Wait for news before entering or wait for a breakout to happen, then enter because it's safe, right? I'm going to rotate into bonds. It's safe. And they use standard indicators like a 50 or 200-day moving average. I'm sure you all have seen someone with their charts with like a 50-day and 200-day moving average, and they say, look, price is going to go here and then bounce. What edge do you have? Zero. Zero. The wolf is forward looking, is anticipating where price is going to go. You often hear it when people play hockey, they skate to where the puck is going to end up, not where the puck is at the moment. We anticipate where the herd is trapped, see where everyone else has their hand, and then use that leverage to inflict max pain. Take the opposite side of retail sentiment and tracks institutional order flow in real time. The institutions are killers. You need to trade like them or at least follow them. Hence why I created my news flow scanner and now my $1 million baby I'm creating now. Uh-oh. New Rolex. Congrats. Buddy just sent it to me. Wow. And got the diamonds in it. So big congrats and happy birthday. Champagne Dow with the diamonds. Let me see how much it costs. I'm nosy. I ask how much things cost. The depth of trend following. Very, very important because I know we probably have some people here who just got into the markets and they probably have this on their charts. You probably have a chart that looks like this, or you probably look at a chart of the SPY and it's probably got this on it. Look, I'll do it. This is how I know someone doesn't really trade. They're an investor and they're brand new in the markets. This is the most standard setup because all the books tell you this from 1990. If this is you, oh, price broke the 50 day. Now it's going to go to the 200 day. You're better off not using anything than follow these. If you are a big fan of moving averages, use a 4 and 8 day variable moving average. Platform X uses that, along with the 20 EMA. So the standard 50 and 200 day moving averages are old lagging indicators. Do you want to lag? You want to be proactive. By the time they signal a trend, the professional smart money has already moved on. The choppy market. We're in a choppy to slightly bearish market. A lot of stuff is. A lot of asset classes are. I would even argue that gold and silver are. They're choppy right now. Trend followers get chopped up. Trend following is good in a crazy bull market if you're buying like index funds like the S&P or like the NASDAQ. But when you use like the 50 or 200-day moving average, you're just going to catch a little bit of the meat of that move. You're not going to capture the big move because the big move is hard. A little bit of the move, if we're trending, we're not trending at all. They buy high on false breakouts and sell on breakdowns, bleeding capital. So, index funds, if you're a trend follower, that's the passive approach. I don't think anyone here is that because if you have money, you just give it to a financial advisor. They design your long-term accounts. Passive wealth preservation. They're going to track the S&P, the top index. Okay. Trend following, when you look at, let's say, hey, we're going to see what bonds are doing. We're going to see what the consumer discretionary sector is going to do. That's great. But it's slow. It's reactive. So you see money's flowing into uh, telecom and food and beverage as a flight to safety. Well, yeah, you should have done that yesterday, not today when the market's down. So it's okay, it's safe, but it's slow and reactive. When you do that, you're going to aim for the market average. And then again, that's a trending market, right? You're a passenger, not the driver. You're not taking control of your destiny. You're never going to win big. You're just going to be subpar. And that's fine for some people. But you're never going to have big weeks or a big year, right? You're literally better off just closing your eyes and buying the S&P. It does well long term. The independent path is designed for those who want to be independent and control their own destiny, which you're probably here because that's what you want to do. So use that Be proactive. You have to be aggressive at times. You can't just always do 5 lots or 10 lots or 1 lots. You do have to be aggressive at times and push. You play poker and you play tournament poker, you just can't sit and call each bet. Eventually, you got to go and shove your chips in the middle. Be a contrarian. And then, in my opinion, track institutional order flow because it's literally the best thing to lean on. And then seek those outsized returns. That means taking short dated, cheap options. That means taking risk, being a wolf when the time is right. So obviously, y'all know I follow institutional order flow in the option market, smart money as it says. And I want to show you a name today uh, that we were tracking with my new, uh, we'll say summary I was able to develop because you move with the predators, not the prey. You're basically trading like a wolf. Now, you don't have to trade $1 million, but even doing, you know, a tenth of that or so, or a hundredth of that, whatever. You do whatever, however much you want. But big money does move the market in real time. So stop looking at lagging and making your own decisions and standard patterns. The truth is where market capital is flowing in real time. So the option pit, just a shout out to all the members. Huge week, very proud, fantastic job, and our analysts posting and giving updates and doing everything in real time. But it's a private Telegram channel that we track smart money, post trades, market sentiment, news. It's been phenomenal lately, so thank you so much. And one more time, if you can join the option pit, I don't think we have a link, so sorry, but ChatGPT wrote it. But let me show you the Amazon here. I'll leave y'all with a little chef's kiss of the Amazonia. Oh, well, Christian did find a link or a phone number. Thank you. I was not supposed to do it, by the way, so just a heads up. I'm not supposed to share that with you. Or Christian was not, but obviously I break the rules. So let me show you a little something here, and then I am going to hand over the screen to Christian. So this is something that I really, really like. It's not done. Diamond members will get the first results, but we've been working with the team of analysts, and I really like what the overview is. Okay. So Amazon today. Can we pull up Amazon? Let me pull up Amazon here. Amazon today. We've had 23 trades, 6.5 million in premium. That does not happen every day, even in Amazon. So we had $1.4 million in the 202.5 call for March 6th. This was followed. I know you guys probably can't read it, but I'll make it big for you. This was repeat follow-up flow, meaning they just didn't say 1.4 million is enough. They came and attacked it. 365K, 337K, 207K after. So if you do the math, you're looking at, let's just say, well, around a little over 2.5 million. Okay. It's a lot of money. A lot of money out there. Liquidity and gamma are concentrated in the next few weeks, targeting up to 212, aka March 6th, which is what, next week. Okay. So with Amazon, We're going to look for a recent breakout over 211.17. We have massive short dated call sweeps, all from the 205 to 212 strike prices. So we actually got a few trades, warped option members. I know you guys and girls got one of these trades today. And it will actually give us our entry, our target, our stop loss, and all the premiums that happen. Now, this isn't even done yet, by the way. This is just something that I am working on, but it was so good. 100% bullish too, by the way. Um, I just had to share because I was so excited from earlier today. More info on that in the next few weeks, and Diamond Club members, you'll probably get, obviously first dibs, so to speak, there. All right, let me see, because I didn't look at the chat the whole time. All right, let me look at the chat. Chat, I was not looking at you for the past 30 minutes. I have to, uh, I'm not gonna lie. Yeah, Coke is good too. Coke is very good protection. Food and beverage defense. Yep, great job in Coke. Coke, Verizon, Pepsi, McDonald's, all that flight to safety, you're barking up the right tree. No, it's not Platform X. This is Platform X, but what I was showing you wasn't. Oh, thank you. Thank you. Michael got the option pit today. Again, we don't offer it. We don't sell it. They don't run webinars on it. It's just I've just been so proud of it lately and so much good feedback that again, I'm not supposed to even talk about it. They're running a string later today, so just shh, keep it hush. Uh, you know, keep it on the down low, put it that way. Don't try not to incriminate myself. Because if you call in, you're probably going to mention it. Uh, I don't know. Who cares? It's Friday. Great job on coin. Oh, you did coin? Wow, look at you. Look at you doing coin. You got some cojones. I'm scared of coin. It's just too big of a stock for me. All right. Let me see. Um, yeah, Manny, that's what I recommend. That's what I recommend. Oh yeah, and then Exxon too. So I'll leave you one thing. Do not, gosh. Oh my God, what a move. So remember yesterday in the option pit, what did we talk about? Energy. Exxon, the 155s, that's a huge move for Exxon. Huge move. Calls are up 150% in Exxon. You just like I mentioned in the option pit yesterday, you cannot go into this week. Kinder Morgan, another one. Chevron, another one. Yeah, all have bullish flow in these names. Or you could just do the XLE. You cannot go into this weekend without owning some energy. You cannot go into this weekend without owning some energy or some kind of hedges. That could be Verizon, Coke, McDonald's, healthcare. UNH has been really good too. You cannot. You have to be prepared. Obviously, you guys know what's going on. Uh, so just a lot of money in the energy sector. A lot of money. So just make sure you're protected. You're up 56% on the Exxon calls. You're up 25% already on Exxon? Jeez. Did I pump the trade for you? You entered today? Look at that. I feel like I'm pumping these markets. Watch, Amazon's gonna break out here too. I just I'm not even talking my book. I'm talking other people's books. Gosh, darn. Good Lord. Yeah. And if you don't want to pick an individual stock, just like I mentioned yesterday, you can always do the XLE. If you trade the XLE, I mean any this pattern works for any stock. If you trade XLE, where's your well, freaking 5 cents now? But eh, you're gonna look to take out the prior high. It just so happens to be 5 cents. But you'll have a volume break. Let's do Exxon. All right. Exxon's a better example. Good Lord. XLE, I didn't know it moved so much already. So if you're at Exxon calls, right? Those March 6 155s, where's your breakout going to be? Where's the big money going to be? It's going to be a breakout over 156.93. So you get a breakout over 156.93, volume, you're going to get a huge rally. Those calls are going to be up 2, 3, 400%. You get a move over the prior high, right? So you have two levels, a move over the prior high, a move over the 52-week high. Look what happened today as we took out the high. I guarantee you volume kicked in. Watch. If I was a betting man, volume breakout over the high. Anyway, that's lunchtime too, so it's not going to be crazy. But you should get a volume breakout over this high, 153.38, and then this high, 156.93. If you get a pullback, right? Let's say the stock goes like this or starts going sideways, use that to reload. Probably could go out to like March. If you do it next week, I would go out to March monthly. But you gotta, the technical analysts would call it trend line breakout, wedge, wedge breakout, boom, boom, boom. Bull flag. I mean, I feel like I'm reading a dictionary learning these terms. Who cares? Just look for a breakout over the prior high and the prior 52-week high. Keep it simple. All right. I think I'm done. Christian, Oxy's good too. Oxy's very good too. Very, very. Oxy's very good too. Oxy, you just look for a breakout. Oh gosh, some of these energy names are already moved. Oxy, you just look for a breakout over this high from Feb 23rd, 53.33. So not crazy, but Oxy, you get the 2% move in the stock. Those options should be up a lot today. Yeah, next week options are up 100%. A lot of heavy next week calls. Wow. All the calls from yesterday, 53s, they still holding. They're still holding. Wow, a lot of calls and open interest. So Oxy, I mean, you got some upside. But I mean, this stock can move, you know. It's a good move for Oxy. So is Apache too. Yeah, that's a good one too. All right. Oh, I just got a ooh. All right, Christian, you want to take it?
Sure do.
All right, Christian's gonna take it and stream one of our classes warped.
Yes.
Okay, thank you. But let's make sure we're on the same page. If you attended my training, trading with emotions. I've thrown up. I've lost so much money. I've lost $250,000 in a short amount of time. Obviously, there is ups and downs in the markets, you know. So just be full aware of that. What I'm trying to do is give you limited risk, I would say more conservative strategy without having to suffer some of those uh, emotional damages and wild P&L swings. So this is why I want to do it today. Our goal is to give you an edge in the markets, one that can you could try to find success that alludes to so many trades. We believe the strategy could offer exactly that edge. But with that said, all trading approaches eventually suffer losses. There's no entering the market without risk, basically. If you cannot afford or stomach losing money in the markets, please turn off the broadcasts or don't trade with real money, right? Like I said yesterday or earlier in the week, anytime you have money on the line, you have emotions. So what I want to give you is a way to help eliminate those emotions. And Lord knows that big head, look at that Mogan head right there. Huge. We got a 5 head too in that picture. It can get you in trouble. Usually, guys, you get in more trouble than girls, by the way. Just being honest. All right, that's me, Lance Ippolito. I got the Gator shirt on today. That's a Costco shirt, by the way. Costco's got some good Florida man gear. And I'm the chief option strategist for the Trading Pub. And frankly, in my 17 years of trading, both professional